The Sharpe ratio is the high twos. It's 4x over collateralized. Here's another chart. This is hyper growth. How do you know that a product's working? Well, it's growing 350% a year. That's how fast it's growing. Like it's 100% month over month growth. So I don't know how long this will be in hyper growth, but right now this is the fastest growing credit instrument in the world, maybe in the decade or the century. Why is it growing so fast? Well, it's growing fast because it's ideal credit, because it was engineered to provide everything a credit investor would want if you look at it from the point of view of the investor, not from the point of view of the issuer, right? Most credit investor or most credit issuers want to create an instrument that's good for them, that's bad for the investor. We started with a blank sheet of paper using digital capital, then we used digital intelligence, and then we designed a credit instrument that's good for the investor, that's the ideal credit instrument. Now, how can we tell? The instrument grew to be the largest preferred stock in the world within 8 months. It's now $8.5 billion. I'm showing you the 10 largest preferred stocks. If you read the chart, what you'll see is that stretch is a simple thing to remember, STRC. The other stocks are C/PN or POW.PR.E. If you went and searched for these, you wouldn't find half of them. Like you can't even Google them hardly. How do you buy them and sell them if you can't find them? They're actually institutional products. They were never meant to be bought. Some of them, the ones that say OTC, it's illegal for you to buy them, right? They weren't built for the public investor. They were built for an institutional world that traded credit in the 20th century. And so what's the result? Nobody trades them. STRC isn't just the biggest preferred, it's actually the most liquid preferred in the world in 8 months. Let me say that again, in the world, it's the most liquid one. It's not even 12 months old. But look who it's competing against. Wells Fargo, Bank of America, Fannie Mae, Citi, JP Morgan. It's 25x more than the next best one, and it's not a year old, right? It's like Superman as a toddler beating the crap out of everybody. And it's because it's Bitcoin powered, right? Now, if you delve a little bit deeper, you'll see that it trades 4.5% of its AUM every day. So it's not just that it's more liquid and it's bigger. It's actually faster, higher powered money. And it's higher powered by an order of magnitude. And so you can see the superior engineering design. Now, what else is highly liquid? Bitcoin. The reason digital credit is highly liquid is because digital capital is highly liquid and the digital equity is highly liquid. And it's not an accident. They're all correlated to each other. If you want to build the one, you have to build, if you want a high energy credit, you have to build it on a high energy capital asset. What else do you want from credit? You want it to be stable. And so you can see in the middle of the crypto or the bear market here in the crypto winter, Bitcoin peaked in October 6th. It was 125,000 a coin. It's 38% down. STRC is 0%. It's exactly held par. And so what you can see is that the credit instrument is something you can manage to hold principal value. And you need an issuer to do that. That's where the company comes in. The capital instrument has no issuer, no counterparty, no one's managing it. If you're a long-term investor, I would tell you every day, buy Bitcoin, don't buy the credit. But the truth of the matter is, most people aren't long-term investors able to take that volatility. They simply want to put their money in a bank account, collect 10 or 11% and not worry about it, let somebody else worry about it. And STRC is built for them. You can see it seasoning. This is the last 8 months or so. And it started off with a rocky start and it gradually fell into the zone. In January, it traded in its target trading range 90% of the time. February was a very difficult month. It traded 80% of the time. And then in March and in April, it locked into place. It's been 100% in the trading zone in March and April. So you can see it's hitting its target range now. And of course, liquidity is everything. There's no point in me telling you this is a good product if you can only buy or sell 100,000 a day. You're not going to get someone to invest $1 billion in something that trades that it would take them 10 years to get out of. And so you can see the liquidity here is grown by a factor of 8 in 5 months. Again, hyper growth, right? Off the charts. There's never been a credit instrument that grew in liquidity like this. This is going viral. This is a chart of preferreds where you look at the return versus the daily liquidity, and you can see STRC is in a class all by itself. It's the supernova of credit. And then everything else is on the sidewall here. It's all illiquid, mediocre. The result is the velocity of this thing is exploding. This is the demand for STRC. It was about a $500 million business per month in January. 500 million, call it 6 billion a year. In February, we got punched in the face. It was a really difficult month, massive Bitcoin drawdown, and it fell to 80 million in demand. In March, it jumped to $1.5 billion. It became an $18 billion a year product. Imagine going 0 to $18 billion a year in the first year. And then in April, it went to $3.5 billion. Multiply $3.5 billion by 12. All of a sudden, 0 to $38 billion a year in a run rate. It's not a year old. So clearly, we're in hyper growth right now. May will be interesting. June will be interesting. July. But you might go Google and ask how many products in the world went from 0 to $20 billion a year in the first year. There aren't many.